Okay, so I wanted to take a little look at all the discussion about mortgages and houses and the real estate market and what's going on. Will prices go up? Will they come down? And what's actually going on? And one of the things I hope everybody appreciates about this channel is that I like to look at actual data and not just tell you, oh, it's going to do this, it's going to do that. This is actual government data produced by the St. Louis Federal Reserve, unless I mark it otherwise, in which case I'll tell you exactly where I got it. You can look at it yourself. Um, the 30-year fixed rate. You hear this reported on the news all the time. Rates are coming down. Rates are coming down. Well, if you look back in 2021 and back sort of before 2020, yeah, these nice 4% rates and went down to kind of a little bit below three. People got locked in like at 2.9, 2.7 in some cases. And then it kind of started to, it went back up and then it kind of started to really rise. And this is where they raised the Federal Reserve rate. I did a whole nother video on that. You feel free to watch it. It's on this channel. There's a playlist with all these lined out. You can catch it yourself. And since 2022, rates have been between sort of five and mid sevens. Remember, this is average rate. This is not anybody who had any special circumstances, self-employed usually pays a higher rate, lower credit score. This is just sort of, you walk in, good credit score, reasonable down payment, that's what you can expect to walk out with. So if you're paying 20, 25% down and you've got a decent credit score, 2-year work history, all that, this is the rate you tend to pay. There are cases above this, there are cases below this, but there's certainly not, this is average, so just to give a point of reference. Now, the average price of a home sold in the United States from sort of the 60s on forward has gone up. But if you look right here, over here towards the end, you got this flat top to the stuff right around 2022. Well, if you go back to that previous chart, right around 2022 is when rates started to go up. Well, home prices stopped increases. You didn't have this massive increase anymore. This was that really low rate, right? So it went, oh, up. This was this was the 3%, 4% rate. We're climbing at some rational speed. We climbed at an insane rate across 2 years. The average home price rose 25%. Some of that's a supply problem, some of that's a demand problem. Now, the plateau is that interest rate rise. Now, if you look at the mean personal income, mean is just a fancy mathematical way of saying average. What's gone on? So from 2020 to 2024, you've gone from sort of 55,000 to 60,000. So you saw an increase in your annual income. Average annual income has gone up a bit in those couple of years, but it hasn't gone up, commensurate with the 25% increase in the cost of buying a home, right? So the average home and the average income did not keep pace with one another. One massively outpaced the other. Which means, you got to have more money for a down payment, or if you don't have enough of a down payment, expect to pay a higher rate. And all those great fancy talking points on the news. What the hell does it really mean in English? So here we go. At 2.9% per $100,000, you can expect to pay $421 a month. That is before taxes and insurance. That's just on the loan itself. Owning a home comes with all these other things, taxes, insurance, utilities. Just the mortgage cost is sort of that 421 number if you're paying 2.9 per $100,000 financed. In today's rates, somewhere between 6.9 and 7.9, you'd be paying 665 and 773 for that same $100,000 loan, which is a 58 to 74% difference, depending on where you fall on what the rates are today. So today they're a little bit below 6.9, so it's closer to between 599 and 655. They have been as high as the sevens, but I wanted to include it all. So best case scenario, you're sitting about 50% more than you were looking at when the rates were 2.9. And the housing prices have stayed flat, right? So that means buying the same house you bought when you locked in 2.9 is going to cost you 40 to 50% more to 70% more per month. Now, let's look at the average price of home in the United States. This is according to the St. Louis Fed. It's $501,700. Now, I'm just going to assume if you're buying a home, you're putting 25% down, which is actually a pretty big number for most people. It's usually more like 20. But if you're selling one house and buying another, maybe you're putting more down. So I'm just going to throw it at 25 just to get some numbers in here. But at 2.9% on that loan, which is a $376,275 loan, without taxes and insurance, you're paying $1,584 on, almost 400 grand worth of money. Now, at today's rate, you're paying between $2,500 and $2,700, which is a not, sort of 8, 9, 11, $1,200 difference. So between, again, 50 and 75% more on that same home. So if that same home costs you more, insurance rates are also going up. There was Florida's talking about raising like 90%. Property taxes are going up. So if you're trying to get into the very same home you bought back when rates were 2.9, you're now looking at, you have to make a lot more money to afford that home, because remember, we all got like a sort of $5,000 a year raise, and now we're talking about $1,000 a month difference in your mortgage payment. And that's before you add all the other stuff, homeowners insurance, which is going up, and property taxes, which are going up, all that kind of stuff. Maintenance, which is not going down for sure. So, you have this problem trying to support those higher numbers. So as you try to keep those numbers high, as sellers are saying, well, I'm not reducing the price of my home, I want this. Well, where the buyer is going to come from, unless they're corporate buyers or people buying it as an investment property, which they're typically buying it with wealth, which means, somebody's paying cash. Well, I talked to a bunch of real estate agents in the last couple of weeks, and there's not as many cash deals running around as there used to be. There's a lot more financing, even up at the seven-figure home level. They're seeing a lot more financing deals. One real estate agent said they saw a $12 million mortgage go through, and I was like, that's interesting, because who qualifies for a $12 million mortgage? And that's a big one, but great for them that they did it. But, it was still a $12 million mortgage came through. But, that does show that we have fewer and fewer cash deals, more and more finance, which is a precarious place to be in, because if you look at this chart, back in 2008, we were sitting at about a little over, somewhere around $9.5 trillion as a nation in mortgage debt. That was at 6%. Well, today we're higher than that number. And what happened in 2008 was a whole bunch of stuff, including teaser rates and a whole bunch of mortgages that shouldn't have existed, and a whole bunch of variable rates, and a whole bunch of things went wrong that caused the housing market to have issues. This is a whole different set of problems, but we're actually a little bit more in debt than we were in 2008 overall as a nation for our homes. Uh, and that just, I only have data through 2020. It actually gets kind of worse from there. But I couldn't find reliable sources for anything beyond about 2020, so I didn't want to include things that I was still kind of fuzzy on. But it hasn't gone down. Every news report I've seen says it's actually gone up since that time. So if you look at these things in a giant pile, it means to buy the very same home at the very same price that you paid a couple of years ago, you're now spending 50 to 60 to 75% more money on a monthly basis. Yet your salary hasn't gone up by that same amount. So is the home market going to go up? Is it going to go down? Is it going to go sideways? What's it going to do? Well, Airbnb is a whole lot of homes were sold to people who are making these Airbnb empires. Airbnb just did their quarterly reports, and man, they crashed. Their bookings were way down. They were having all kinds of problems. Their stock took a nosedive this week, along with a bunch of others. But theirs was primarily because their last quarter was horrid. You're seeing fewer cash deals, which means more people are having to finance, which means I think the end of this, hey, let me go buy 10 homes and create this sort of empire of rental. I think that might be coming to an end. So the other thing you're seeing is homes are coming on market and they're not selling as quickly as they were. So at one point, if you were in the town I'm in, I live in Frisco, Texas. If you weren't like writing an offer on the way to see the house the first time, you're probably going to miss out, because they were just selling in days. Now they're coming on market and staying on market. Like nobody's even going to look at it. I saw a real estate agent that was having an open house at the same house 4 days in a row, which to me says, something's going on. So is the housing market going to continue to rise? At these interest rates, there is no way that's going to happen. Now, if they lower interest rates at the Federal Reserve, which would again lower interest rates on the homes, what's going to happen is inflation comes back, and people again are going to have their budget stretched. So I don't know that that's really going to be a viable option. So what's going to happen with the housing market? I don't know that it can continue to maintain the prices it's got. I don't see that it's going to go up. The only viable option I see is that it comes down. The big question is how much and how fast. But I think it is going to come down. And I think personally, and again, I'm a physicist. I'm not any kind of an investment guru, but just the math is the math, right? So as homes are on the market and they sit there longer, and people have this problem where incomes aren't keeping up with the average home price, they have to come down. I don't think it's going to be as quick as it was in 2008. I think it's going to be a little slower than that, but I could be surprised. It could be that fast. Who knows? But I do think it's coming down. I don't see any way for the high prices to be supported in an ongoing basis. I think they are coming down. And part of it, part of that belief comes from, I saw somebody in the town I live in bought a house uh, literally bought a seven-figure home because I saw it on realtor.com or homes.com, whichever website I was looking at. They bought the place, painted it, put it back on the market 3 months later at 20% higher than they paid for it. That's insane, right? They're not going to get that price. And it is sat on the market now for 90 days or something. Of course, because it's 20% more than it was just a year ago, and it was paint. Come on. So, if you look at it, I don't see how these prices are going to be supported. I certainly don't see how it's going to go up. I don't see it. I think it's going to at least stay flat, but I do think you're going to see a correction where it's going to come down. Who knows how far, how fast? We will all watch and see what happens. Everybody have a great day.